Welcome back. In an otherwise bleak market, it's a strong listing that we're seeing for precision cage manufacturers, Harsha Engineering. We have Vishal Rangwala, Harsha Engineers Limited, that is the company. It's up almost 43%. The issue price was 330. We do have with us the CEO, Vishal Rangwala, joining in. Vishal, thank you so much for joining in. It's been a strong listing, but now the street wants to know what next from here on. You know, the last time you joined us, you said that at peak, your revenue could be close to around 2,000 odd crores. Just wanted to understand by when do you intend to get to that mark? What's the glide path there? And at that part, you know, you would see some benefits of operating leverage coming in as well. So what would the margins be at those levels?
So I'm not able to exactly share the margin numbers, but we are confident of growing this margin, taking it forward. We are expanding our product portfolio, also getting into larger size cages. So all in all, very confident of hitting that number, including taking advantage of some operating margins.
So by when do you hit that number? And when you say operating margins will improve, I mean, if you could give us a sense of a ballpark, say what kind of operating leverage benefits would you see? Would it be 100 basis points, 200 basis points, 300 basis points, given all these things that you're doing?
Quite difficult to exactly answer that question. However, last year we have seen a lot of difficult situation on the energy cost in Europe and etc. So even improvement on those, ability to pass on those to our customer, that will also support expanding these margins.
Okay, all right. Hi Vishal, the street will be very, very happy today because of your listing. Very few stocks are in the green and your stock is one of that. But that's where things get challenging, right? From a listed company perspective. So let's understand a couple of numbers. FY23, what kind of a revenue growth can you guide for? Last year you did around 1,300 crores. With your current capacity, you can do around 1,800 crores. That's pre the capex. Then you move to around 2,000 crores. So for this year, what kind of a growth are you looking at? Give us a broad number. And also on the margin trajectory, you're in that vicinity of around 14 to around 14.5%. Will you stick to that band, or is there a bit of a tailwind coming in? Input costs cooling off, operating leverage playing out?
On the margin front, definitely both of those. There is a tailwind. There is a lot of products we have developed which are coming online. Also, as I mentioned, that there were energy challenges, we were now able to pass on those. So we are confident of growing margins. On the top line, again, we are confident of exceeding the industry growth based on the fact that our product portfolio is very strong. We are working on a lot of outsourcing of further outsourcing of cages, and we see that the whole China plus one strategy, how it plays out,
yes,
will also
Vishal,
benefit us in a significant
Vishal,
way.
before you list, we give you that bit of a leeway and we let you go without numbers. Now both the regulators and us as well, we want a couple of numbers. So we could turn it around. How much is the industry going to grow by, and at what pace will you grow if you're going to outgrow? 1.1, 1.2, 1.3, 1.4 times. Give us a revenue number. Let's focus on that first.
Right. So, as I mentioned, a lot of factors going into that.
We get that.
Industry,
we get
what
that,
we
but
estimate is going to grow 6 to 8% growth.
Okay.
And again, as I mentioned, that because of China plus one and outsourcing, quite confident that we can hit the teen numbers.
Okay.
Again, difficult to put in an exact number.
No, teen is good. Teen is good. I mean, you've given us a ballpark. Teens could be anywhere between 13 to 16. If you're looking at mid-teens, that is low teens and mid-teens, that is something that the street will, pencil in as well as far as the growth is concerned. Just wanted to understand, roughly 40% of your revenues comes in from Europe. 65% is exports. Are you facing any issues there? Because, I mean, on the one hand, exporting should benefit you on account of weaker rupee, but we haven't weakened as against the European currencies out there. We've weakened against the dollar. So how does that work for you, and what's your hedging policy?
So one, you're correct that Europe is a significant chunk of market for us. However, a big chunk of or large chunk of that European market for us is manufactured in Europe, and another chunk is going from India. We are seeing long-term a very positive growth. We have not seen any short-term impacts yet, but this is a developing situation in Europe. So, I mean, in general, confident that we will continue to grow within Europe as well and overall. On the hedging front, we try to protect our cost. That's our objective. So we do a little bit of forward and focus on short term and try to pass on if there is a long term impact. Work with our customer on passing on those.
All right, we got the top line brief number. Teens is what you're going to be growing at, and that's a rather large range, but we'll take it at that. What about margins? 14.5% in the near term. Will it hold on, or do you believe you can go to the mid-teens? That's more than 15%. So that's point number one. And I believe you're the second largest player, right? What's the difference between you and the largest player? And has that been narrowing over the last few years?
Definitely, it has been narrowing. The largest competition we have is a Japan-based company called NKC, and they are about 1.5 times our size, but we are very unique in a sense that we deliver product bearing cages specifically in brass, steel and polymer material, whereas our competition focuses on one or two of those materials. So with our strong portfolio, we are catching up to them, confident of reaching a good or reducing that gap further.
Okay.
And on the margin front, our India base, if you look at standalone, we are a very strong margins, and a lot of growth is happening in India. So just by that virtue, we will definitely further grow margins as well.
You're being a little cagey yet again. Will it be a 15% margin? Should we be working with that? But this year?
See, I understand. I'll not be able to share specifics.
All right.
Right. You take that point, Vishal. Okay, let's talk about a couple of other things as well. Just wanted to understand typically what is the working capital cycle for players like you, because I see, last year your operating cash flow was just around 37 crores versus an EBITDA of 170 crores. A large part of that was on account of high inventory buildup. Has that liquidated? What is the inventory cycle, working capital cycle that you guys work on?
So, see, we operate multiple warehouses very near to our customer across the globe. 25 plus, countries we maintain the warehouse. So yes, there is a significant inventory requirement to support that. Part of this was because, the growth was coming and we had to build the inventory up front. So we have done that work last year.
Okay.
And that's part of the reason. Another aspect of last year challenges were related to a lot of raw material supply side issues. So we were building inventory to make sure that we don't impact our customers. So all in all, we are on a little bit higher side, and we are hopeful that we can work to improve this going forward.
So a two-part follow-up on that, Vishal. The first one is that you said you are front-loading your inventory for growth, and secondly, you said there were raw material challenges as well. So the two parts are, one, what will your working capital cycle be for this year? And secondly, now that you front-loaded your inventory, you don't need any working capital. You've repaid your debt with the money, or you will be repaying your debt with the money that you get from the IPO proceeds. Your balance sheet should look relatively debt-free and net cash for the next couple of years. What's the sense? When is the next round of debt raising, if at all you have to do?
We don't expect to do, debt raising anytime soon. We have investment plans to support our, customers' growth and in line with that. So next 2 years, we don't expect to raise significant debt. We will probably work with some working capital if there are, relatively cheaper side because we do a lot of exports and we get a lot of those opportunities. But beyond that, we don't expect to raise significant debt.
Working capital days?
We target about 110 days of complete end-to-end cycle.
Okay.
For us.
All right. And final question then, your interest
And we
saving.
were a little bit higher last year.
Okay. All right. 110 days, we take that. And your interest savings will be 12 crores, right? On the repayment that you're making.
Correct.
And
correct.
so-
approximately that, a little bit higher.
Solar business does around 80 to around 100 crores in this year, FY23.
That's the expectation, correct.
It's been good speaking to you, Vishal. Your shareholders are quite excited, I think, with the issue. Next time around, hope you could give us a few more numbers, but you're giving us a broad sense. You'll outpace the market growth. Your margins will hold steady. There are a couple of levers as well. You'll be debt-free. Working capital days come down to around 110 days odd. Congratulations on a solid listing, and we look forward to speaking to you rather soon.
Thank you.
That's
Thank
the
you very
big
much.
listing. Well, Harsha Engineers International, solid listing gains out there. The premium out there in the grey market as well was quite massive. And, it's justified that up more than 40%. Slip into a short break, come back. We continue our focus on the markets.